Hi, this is Akmir with the Bulletin Board Heroes here at Vox Markets for Wednesday, the 27th of October. Starting off with AsiaMet, and still looking like a decent basing building type situation. Got that resistance line there from back at the beginning of the year. That's currently heading towards the 3.7 pence area, and we should get that for the share price as a target while we hold above the 50-day line and the floor of the rising trend channel around the 2.7 pence level. But the main thing here really is breaking that 3 pence zone on a sustained basis, and then we could be off to the a decent upside, maybe even more than the 3.5 pence area, possibly up to 4.5 or even 5 pence. So looking like as I said, a decent extended basing for the shares for much of this year. Moving along to a requested stock, Chariot Oil and Gas, which I suppose so far hasn't really got that excited about crude oil hitting the highest level since the pandemic, but we have broken that line of resistance there from back in May. That also broke the 200-day moving average at 7.2 pence, and above that, best case scenario target here up to 11 pence. Of course, there is the issue of that old August resistance there at 8 pence, so if you're cautious, maybe you'd wait for an end of day or a weekly close back above that before assuming 11 pence was on its way by, say, the end of the year. Better situation than that comes from i3 Energy, which is going great guns on the fundamental front at the moment. Here we can see that shares gapped up yesterday, then filled the gap and bounced off the floor of the gap there around 13 pence with a hammer candle so far. Looking to break that line of resistance in a definitive way around 13.5 pence either today or by the end of the week, and that would then set up the shares for the top of a rising or a broadening triangle up to 25 pence, which could be hit maybe on a 2 to 3 month time frame. So looking pretty encouraging there for i3 at the moment. Moving along to Katoro, and here you can see that shares have been a decent, sort of flicked up as a decent recovery situation, basing below 0.8 pence and that final bear trap at the beginning of last month. View of this stage is that the longer we stay above 0.8, the greater the chance of a move towards the top of the broadening triangle at 1.6 pence, perhaps by the end of the year. Favourite stock of mine after the arrival of Luke Johnson was, or is, Marichal Capital. Here we hit the original 4 pence target that we had, and the longer we stay above 4 pence, the greater the chance of a fresh move to the upside, maybe as high as 8 or 8.5 pence, which is the top of a rising trend channel that can be drawn from back in February. Obviously, that's the best case scenario, maybe on a 2 to 3 month view. But the prize here is that the longer we stay above 4 pence, the more secure the upside for Marichal looks at the moment. Another requested stock is Mega Diagnostics, where the requestee seems to be quite enthusiastic about it. At the moment, though, we've got this line of resistance there from the end of August. That's running through currently around 51 pence. Also, just the shares currently just below the 50 and 200-day moving averages as well. So just need to break that 51 pence level on an end-of-day close basis or a weekly close basis, if that's better for you. The other point to note, though, is if you are a fan of the shares, then there is that line of support from way back in March last year, which the shares have actually bounced off twice intraday. You could almost say 3 times, actually, with that rug pull that we had back in December. But the main support here at 35 pence, and presumably that will not be broken ahead of a move to the upside. If we break 51 pence, then it's back maybe to the upper 70s or maybe 80 pence at the top of that June trend channel. Stock which is continued to be inspiring my imagination is Quantum Blockchain. I think it's been on the Bulletin Board Heroes every day for several days, and it's that stock that keeps on giving to the bulls. Current situation is that it'd be nice to see an end of day close back above that April peak at 3.6 pence. If we can manage that, we could still have a bit more gas in the tank for a move up towards the top of the rising 2021 price channel as high as 5.25. That might be seen by the end of next month, but obviously shares have come up a long way in a short time, and so this could fizzle out any time from now. Tower is next, and Tower Resources, the stock which has broken that line of resistance and the sort of triangle that we had there around 0.35 pence, and it looks like it's going to be able to retest the August resistance of around 0.67 pence, maybe by the end of the year. Obviously, again, we've come up a long way, so maybe a bit of cooling off is required, but while we're above at least that old September resistance at 0.43, we can call the shares higher in a valid way. UOGs next, United Oil and Gas. Here it's been a difficult customer. Just the first signs that the shares are getting some acceptance, at least at and around the 50-day moving average at 2.85. It'd be nice to see an end-of-day close above that. Otherwise, if you're fussy, maybe you want to see an end-of-day close through 3.15 pence, which is that July resistance line. And above that, then the shares could have their chance at going for 4 pence, which is post-June resistance. But as I said, the longer the shares remain above the 50-day line on an end-of-day close basis, the better that situation looks, at least in terms of turning around the extended decline that we've had over recent months. No such concerns at Valerix. We saw the shares, I think I first spotted them around 25 pence, was looking for 40 pence, and then was looking for 55 pence. So that's all gone well. Final situation, though, here is that best case scenario is that while we're above the 50 pence area, we could see a 2 to 3 month move up to 90 pence. Not sure what would do that. Obviously, something quite special, but at the moment, that's where we are on a technical basis. But we do need to hold that 50 pence level. Otherwise, the 90 pence area is delayed. Finishing off with Zytronic, which I don't think I look at very often, but here it is, double gap higher in the recent past after a bear trap, so that's all good stuff. A gap higher unfilled in September and so far in October. View here is that the longer we stay above the old September peak, £1.85, the greater the chance of a move towards 245 or 250, which is that resistance line, the top of the broadening triangle from back in July last year. So added to the two unfilled gaps to the upside is also the golden cross that we had earlier this month as well, and that makes this situation look pretty strong indeed for the end of the year, being a £2.50 target, something like that. That's it for me today. More updates tomorrow.